Sigbjoern Johnsen joins me on the line from Oslo. Mr. Johnsen, thank you very much indeed for speaking to us. So we have accelerating growth in the second quarter. Are you confident that your country's economy can withstand a debt crisis here in Europe along with slowing growth over in the US?
Well, first of all, good morning to you. And as you said, the growth in Norway has revealed for this first half year is reasonably good, and we also estimate that this growth will continue through the next year. So, of course, there is uncertainty in Europe, but I think if we keep our own house in good order, that is the best protection against volatility and uncertain markets.
As you say, uncertain markets and general uncertainty in the region, in Europe, does that make it difficult to remain optimistic about the prospects here going forward?
Of course, we must always have a very keen eye on the situation in Europe, because Europe is our main trading partner, and of course a contraction of markets in Europe puts extra challenge to the competitiveness of Norwegian businesses. So this is one of our main concerns when we are now entering into the final stages of constructing the fiscal budget for 2012.
And when you speak about contracting markets, and you think about, just thinking about the volatility, the rout that we've seen in European equities, are you positive on European markets going forward?
Yes, of course, there is uncertainty, and I think that uncertainty might stay on for a while, but I'm confident that Europe is coming back, and but they have to cover some ground, I think, and first of all, it's very important that you can restore the necessary confidence in the country's ability to deal with the deficits and the growing debt.
How difficult is it going to be to regain that confidence?
Well, I think one must always do what one had promised to do, and many European countries are now going through very harsh measures in order to cope with the deficit. So I think that the main thing is that you really do what you are supposed to do, and I think that's the only way to regain confidence, and I'm quite confident that they will do that.
It's a very difficult dilemma, isn't it, Mr. Johnsen, because they have to do what they say in terms of spending cuts to bring down the deficit to regain confidence, but at the same time market confidence has been hit by the fact that actually those spending cuts are going to have a very negative impact on growth going forward. How do you reconcile those two things?
Well, first of all, there are really two challenges. One is the need to increase private consumption and growth in the private sector. And I think when you regain confidence, one could also see lower interest rates in some countries, which means that they might also get some room to maneuver on the fiscal side, because the challenge with high unemployment, especially the unemployment among youth, is a very grave concern, I think. So it's very important. Gaining confidence would also enable them to be more active in the labor market policies.
I mean, politics has played a significant role, hasn't it, in the market instability that we've seen over the past few weeks, the past few months. There seems to be a lack of confidence that the politicians can deal with the challenges ahead of them. Are policymakers doing enough to tackle the debt crisis?
Yes, I think so, and but of course the markets are generally nervous, and we have seen that in these days, but I'm confident that the European politicians know very well what to do, and I'm confident that they are going to also do that, because there is really no other way, and they are working hard, and many countries are going through very austerity times, and in my view they are going to cope.
But I suppose the problem right now is that they seem to be disagreeing on what to do. You have the Eurogroup chairman, Jean-Claude Juncker, you have Olli Rehn saying that we need to push for Euro bonds, closer fiscal union, but then you have German politicians disagreeing with that, rejecting that idea.
Well, of course, politics is also discussions, and part of politics is also to discuss what is the best ways and means to deal with a challenging situation. But at the end of the day, you must come up with conclusions, and I'm certain that they are going to come up with those conclusions.
Do you think that conclusion would involve Eurobonds?
Well, it's not up to me to speculate in that because, as you know, Norway is not member of the EU and we are not a member of the Eurozone either. So I think I leave that decisions to the politicians in the Eurozone.
But from your observations, your knowledge, your insight of the situation right now, would closer integration help stabilize the situation in the region? And by that I mean the borrowing costs for those weaker southern European countries. Would it keep them in check?
Well, I think it is wise from me not to comment on that.
All right. So let me ask you, is Norway investing increasingly outside of Europe, emerging markets looking more and more attractive in this environment?
Well, if you are thinking about the investments of our state pension fund, yes. International, well, we have an overriding investment strategy saying how much we should invest in different parts of the world, and we are following that overriding strategy. But as we announced when we presented the report for 2010 for the fund, we also said that we over time are going to reduce our share in Europe, but that's not due to the present situation, but really as a reflection of the changing weight between different markets. But we are a very heavy investor in Europe. We are a long-term investor, and I think that our fund makes a contribution to more stability.
All right. So let me ask you then about the situation in the US right now, because there are concerns there about a slowing and stalling recovery. Do you think that further stimulus, more quantitative easing, would help the recovery on a more sustainable, firmer footing, if you like?
Well, the U.S. is a very big and from the outset a very strong economy, and history has shown that the U.S. always bounce back, and I think they also will do that this time. But of course, there was some uncertainty created due to the downgrading and also due to the discussions that they had in the Congress. But the U.S. is going to bounce back, and they have to bounce back because it's very important also that the U.S. cope with the unemployment figures in the U.S. in U.S.
So you're confident that growth will pick up later this year or early next year, or do you think we just need to accept that growth will be a little bit slower after a major financial crisis?
Well, it's very difficult to make estimates for the future concerning growth. So I think that we will see some sluggish times concerning growth in many parts of the global economy. But of course, the growth has picked up since 2008 and 2009. But it's very hard to make real good estimates on how it's going to look like next year and the year after that, but it's going to bounce back, but it might take some time.
Mr. Johnsen, if I can ask you one very quick question about the challenges in your own country, and that is that your currency has been strengthening. How much does this concern you, because there are signs it's already hurting exporters?
Well, looking forward for the Norwegian economy, there are two really overriding challenges. One is, as I already mentioned, the competitiveness of Norwegian businesses, and that's really one of our main concerns. And the other one is to keep our generational contract in order, which means that also our next generation should be able to pay for our common welfare. So those two are the most overriding challenges for the time being, and subject to discussions in the cabinet in the days to come when we are making the final drawings of the next year's fiscal budget.
Mr. Sigbjoern Johnsen, the Finance Minister of Norway, very good to talk to you. Appreciate your time.